So if you're an online seller on, say, Amazon or Flipkart, you know that taxes can get, well, a little complicated. But have you ever really thought about what happens after your platform files a GSTR-8 for you? Where does that tax money actually go? Well, in this explainer, we're going to follow the money and clear up the entire journey step by step.
You've probably seen it before, right? A TCS credit that just appears in your GST portal. And, it can kind of feel like this magic money that just shows up. But here's the thing. It's not magic. It is your money. And figuring out where it comes from is absolutely crucial for managing your cash flow. So let's trace it all the way back to the source.
All right, so here's our game plan. We're going to follow this credit on its entire journey. We'll start right at the moment your platform files the return, then we'll see how that credit pops up on your portal. After that, we'll walk through the really important choice you have to make, see how it directly impacts your cash, and finally, we'll map out the whole GSTR-8 process from A to Z.
Okay, let's kick things off with step 1. And you might be surprised to hear this, but the whole thing doesn't actually start with you. It starts with your e-commerce operator. The second they file, a whole chain of events is set into motion, completely automatically.
You see, every single month, these big platforms, Amazon, Flipkart, Meesho, you name it, they have a responsibility to file a return called Form GSTR-8. This form basically lists all the sales made through their site and, most importantly, the tax they've collected on your behalf. And this one action, it's the trigger for everything that happens next. It creates this perfect digital trail.
And get this, the second they file that GSTR-8, the GST system just jumps into action. It's instant. An acknowledgement reference number, or ARN, is generated. Think of it like an official digital receipt. At the very same time, the system shoots out an SMS and an email to the platform, confirming that everything was submitted successfully. And the best part? This whole initial step is totally automated.
And look, this isn't just some theory. The platform gets a real, actual notification, pretty much exactly like this one. It's a clear, simple confirmation that the ball is officially rolling. Now, what happens next is where things get really interesting for you.
Okay, so the platform got the message. But how does that information actually get to you? This is where the baton is passed from the big e-commerce company directly into your hands, the seller.
Now hang on a sec. Before we dive deeper, let's just make sure we're all on the same page with this one term, TCS, or Tax Collected at Source. In super simple terms, it's just that tiny percentage of tax that, say, Amazon collects from the customer's payment for you on your behalf. This is the exact credit that we're tracking.
All right, to make this all real, let's follow a little case study. Let's imagine a seller we'll call Rahul Traders. They sell on Amazon, and in 1 month, they had sales of 1 lakh rupees. So Amazon collected 1% of that, which is 1,000 rupees, as TCS. Now this is the key part. Amazon reports that exact info, the sales, the TCS, the seller's GSTIN, in their GSTR-8 filing.
And here is the magic moment. That 1,000 rupees doesn't just vanish into thin air. The GST portal automatically grabs that data from Amazon's filing and pushes it straight into your GST account. You can literally log into your own GST portal and boom, there it is, waiting for you in a section called TDS/TCS Credit Received.
All right, we've now reached what is probably the most critical part from your point of view as a seller, because that credit is sitting there, but you've got to do something. This is where you get in the driver's seat and take control of the process. So what do? Well, you have 2 very clear choices. If everything looks right, the numbers match your own books, you just click Accept. The moment you do, that money gets moved into your electronic cash ledger, which is basically your digital wallet for paying taxes. But if something looks off, you click Reject, and that record gets sent right back to the platform to be fixed.
Now you're probably thinking, why on earth would I reject this? Well, believe it or not, mistakes happen. Maybe the platform reported the wrong sales figure, which means the TCS amount is wrong. Or maybe there was a simple typo in your GSTIN. It's your job to be the final set of eyes on this data.
Okay, so we've been talking a lot about the process. But what does this all mean for your wallet, for your actual cash flow? Let's follow the money now that you've clicked Accept.
Let's check back in with Rahul Traders. So after they do all their calculations, let's say their total GST liability for the month is 15,000 rupees. So that's the bill they have to pay to the government for the month.
But wait a second. Remember that 1,000 rupee TCS credit they just accepted?
Well, the system lets them use it right away. It gets subtracted directly from their total tax bill, kind of like a prepayment you already made. And there you have it. That's the bottom line. Instead of paying the full 15,000 rupees out of their bank account, Rahu Traders only needs to pay 14,000. That simple act of accepting the TCS credit just saved them 1,000 rupees in cold, hard cash for that month.
Okay, let's take a step back and look at the big picture now. We're going to wrap this all up and see the entire journey from start to finish, and just tie up any loose ends. So we've talked a lot about hitting accept, but what happens if you reject a credit because of a mistake? Well, the system automatically flags it. That incorrect record is sent back to the e-commerce platform's dashboard. Basically, it tells them, hey, you need to fix this, and they're expected to correct it in their next month's GSTR-8 filing. And here's something else to keep in mind. This whole back and forth isn't happening in a vacuum. Once that GSTR-8 is filed, it's also visible to GST officers. It's a really key part of the system, designed to keep everything transparent and above board for everyone involved. So let's recap the whole thing in 5 simple steps. Ready? The platform files the GSTR-8. Notifications get sent. The TCS details show up for you, the seller. You either accept or reject. And finally, that money either lands in your cash ledger or the record goes back for a correction. See? When you break it down, it's actually pretty straightforward.
And if there's one thing you remember from all of this, let it be this. As a seller, you do not file GSTR-8. Your job in this whole big, complicated system is actually super simple, but it's also incredibly powerful. You just have to check the details in your portal, and then, with one click, either accept them or reject them. That's it.
So there you have it, the full story behind that little number that pops up in your portal. It's not magic. It's a clear, traceable process that's designed to make your life a little bit easier. So really, the only question is, next month, when that TCS credit shows up, are you going to be ready?